Hello and welcome to Core Finance. I'm Matt Brown. Happy Friday to all you viewers out there. We have with us today David Paul, who is Managing Director of VectorVest, and we're going to talk about trading, what not to do, which is important, and I think this will be a very important piece for our viewers. So thank you very much for coming on today to the show, David. Starting off, let's have a look. Four mistakes preventing you from consistent gains in the stock market.
Well, yes, I want to talk about the path to consistency. And these four mistakes I've seen over the years, and dozens of portfolios are made over and over and over again. The first mistake, I've titled it Thinking of the Money First. And although in investing and trading, the objective is to make money.
Exactly.
But nevertheless, in all successful businesses, for example, if you think about the most successful dentist that you know, that dentist is successful and has a wonderful practice because he focuses on perfect execution of each procedure. And as a result, if he focuses on perfect execution of this one root canal, for example, then the money will take care of itself. And similarly in trading, our objective should be to focus on perfect execution of this one trade over and over and over again. The rules don't have to be complicated. Certainly with VectorVest, we rank and sort all of the shares in the major stock markets of the world by value, safety of earnings, and the trend. And then the trader needs to formulate some simple rules and then to focus on perfect execution, focusing on the process of trading as opposed to the end result. And if you do that, the cash takes care of itself.
Understood.
I'm asked by desk heads all over the world, what makes a successful trader? And I always say a successful trader is a very present person. They've got the ability to focus on what's happening now, not looking at what happened last week or what might happen next week, but focusing on what the market is telling them now in relation to their trading rules.
Understood. So have a plan and stick to it and live in the moment.
Well,
is key.
very much so. As soon as you move from that, then you can be like this young man thumping the desk. I think we've all been like that at one time or another with our trades. And then the next step, of course, is like this young fellow here in the car. And again, we've all been like that at one stage or another. Just got to ask yourself, what's the level of decision making that this young man's exhibiting now, as opposed to what he would do if he was sitting in his armchair at home. The only way that I've found to bypass the emotion is to focus on being totally and utterly present in exactly the same way as special forces are taught to be present when somebody else is shooting at them.
Understood. Don't panic. No emotion. Understood. Yes. Because if you do panic or have the emotions, then that's when bad decisions happen.
That's when bad decisions come in. Yeah.
Understood. What else are we looking at?
Well, the second big thing that comes from dozens of portfolios that I've looked at around the world is that this amazing temptation to buy stocks that are falling through the floor. The old 2 for the price of 1 has bankrupted more people than anything else in stock trading. I'm not saying for a second that you don't buy a pullback in an uptrend, but nevertheless, when that uptrend is cracked and the share is falling down the page, then it's just so tempting to try and get in and time a bottom, and invariably that's a disaster. And if you'd bought Marconi at £13, you would have gone bankrupt, I think, at 5p or something. Yes. It just kept falling down the page. So we want, at VectorVest, we advocate buying into the very, very best stocks with outstanding fundamentals that are rising, that are breaking up through new highs. So that's the second mistake.
Don't catch a falling knife, as I learned from my father.
That's correct, yes. The third one, Matt, never wear that vest again, okay? The third mistake is holding on to losers too long. It's so easy to have a cracking year with 9 shares out of the 10, and you hold on to this one hobby horse, and that blows the year. It certainly happened to me. I started to trade in 1982, and it went well for the first couple of years. In 1984, I had one share that I was sure was a big winner, and I held on to it, and I held on to it, and I held on to it. And in 1984, in 3 or 4 months, I gave back all the money that I'd made in 1982, 83, and the start of 84. So I was living in Johannesburg at the time, and I sat on a mountain outside Johannesburg and I meditated, and that hasn't happened again.
And then that's emotional. I mean, that's a sign of emotional trading when you become emotionally attached to your loser.
So it's a subset of mistake one, that's for sure. And the last mistake is to ignore market direction. Dr. Bart De Lido, the founder of VectorVest, puts it really well. He says that the most important thing to know is whether the market is going up or down. Everything follows from that. So you need some form of clear objective rule that tells you whether the overall market is rising or falling. Some people do it with moving averages. Moving averages are cool on the buy side because markets tend to be quite slow in moving up, but they tend to be very fast in falling down. So the lag in moving averages, we have our own system at VectorVest, but nevertheless, everybody needs some form of objective rule to tell them when it's safe to be in the market and when they should be out in cash, or if they understand how to short the market, to be actually making some money as it falls. So we have our own measure of this, and in the last slide, that's the VectorVest composite of the UK since the start of 2016. And those are our market timing signals. I think you can see the red and the green triangles.
I think you've got some breaking news for us, though.
Well, yes. The market turned up on the 19th of July, a few weeks back. That wasn't much of a move. It seemed to have made a bit of a double top up there. And last night, in fact, we got a long-term sell signal. The short-term trend on VectorVest has been down for the last 10 days, and we've been advising people not to actually buy into any positions, to sit in your hands for the last 10 days. And last night, in fact, the longer-term trend turned down as well. So we're advising all our people to be exceptionally careful in the market, and those aggressive traders should be playing the market from the short side.
Understood. Okay. Heard it here first. And finally, which of these mistakes has cost you the most and how much?
Well, yes, I just like everybody that's listening to think about that, to work on. I think in terms of the building the discipline to follow a set of rules, I think that a good read of Mark Douglas's book, Trading in the Zone. Mark has got the late Mark Douglas has in fact got an exercise at the end of that book to build trading discipline, but there's no point in reading it if you don't do it. It's a bit like reading about doing press-ups.
Exactly.
Nobody can do those press-ups for you. You've got to do your own press-ups. And to build trading discipline, largely you have to stick to your trading rules for a batch of trades. And the trading psychologists call this process neuroplasticity, where you actually create new pathways, assuming there's something between your ears. And I've found in coaching traders that if I can keep them following the same set of rules from somewhere between 8 and 13 trades, that those new neural pathways are actually created.
Fantastic.
So I say to every trader, every aspiring trader, in terms of being consistent, you're somewhere between 8 and 13 trades away from the trader that you want to be. But nevertheless, very, very few people get there, because after 1 or 2 losing trades, they tend to give up and look for something else. I have a seminar in London coming up in the middle of next month. And I'll be talking about our most conservative trading methodology at VectorVest. It's called worry-free investing, and that's in Mayfair. I think it's on October the 15th. It's in the evening. Anybody that wants to come along can register at the website, and we're great to see everyone.
Brilliant. Well, on that note, invaluable advice for all our viewers and traders, wannabe traders or current traders. Please check out David's website, and thank you very much for joining us today.
Well, Matt, thank you for having me. It's been a pleasure.